Hey everyone, and welcome. And if you've ever wondered whether your 401k can invest beyond traditional stocks, bonds, and mutual funds, and actually invest in private equity, you are in the right place. Today we are going to discuss exactly how it works. Please also like today's video. Please subscribe to our channel so that you receive notifications when we go live. We go live a couple times per day. Today's topic is, can a 401k invest in private equity? Go ahead and type over your questions during the live webinar, and we'll go over those questions as they come in. They can be regarding any topic. It doesn't have to be specifically regarding today's topic. So most people think their 401k is limited to whatever menu of mutual funds their employer gives them. But here's the truth. With the right type of 401k setup, you can actually open the door to private equity, meaning startups, privately held companies, and investment funds that most retirement savers never get access to. So here's what we are covering regarding today's topic, which is, can a 401k invest in private equity? So what does private equity really mean? Well, private equity, it's similar to investing in a publicly traded stock, a publicly traded company. Examples of privately traded companies are NVIDIA, you've got Palantir, you've got Microsoft, Facebook, Home Depot, Amazon. Those are publicly traded companies, meaning that they've registered with the Securities and Exchange Commission and they're traded on an exchange, whether it's the Dow Jones or the NASDAQ, for example. Private equity means that those entities have now registered with the Security and Exchange Commission, hence the word private. What is more, they're not traded on a publicly exchange like the NASDAQ or the Dow Jones, for example. Examples of some privately traded companies would be Perplexity, for example. You've got SpaceX. There's ChatGPT. Those are just some that come to mind. So again, private means that they are not traded on an exchange. So you cannot easily determine the market value of that particular company, that company stock. Whereas if you search for Amazon or Palantir or Nvidia, you can find what the stock price is for that for those companies throughout the day because they're traded on the Nasdaq exchange. Whereas with private equity, they're not traded on any type of exchange, so you cannot readily determine the market value of that particular private stock on a daily basis. But again, it's just like investing in a company, except that the company is private. It's not a public company, meaning they haven't registered with the Securities and Exchange Commission, and they're not traded on an exchange like the NASDAQ or the Dow Jones. Okay, again, please like today's video, subscribe to our channel to help get the word out to other solopreneurs like yourself. Please also type over any questions during the live chat and we'll pause and answer those questions as they come in. So the big question is, can a 401k invest in private equity? And the answer is yes, but it depends on the type of 401k. When I say type of 401k, I specifically mean that A, 401k plans are offered by an employer. B, the employer gets to decide what investments can be made within that 401k. The employer is typically the administrator, and they may have a board of trustees, or in the case of a solo 401k, the employer is the administrator, and then the business owner is the trustee of the solo 401k plan. So not all full-time employer traditional 401k plans allow for investing in private equity. I know that the president recently signed an executive order calling for allowing for private equity, private investments to be an investment option in traditional 401k plans, aka full-time employer plans. But that doesn't mean it's law. And currently, the regulations do allow for investing in private equity, private investment. It's just that not all employers allow for investing in private equity in their 401k. So it's not that the law does not allow for it, it's that the employer has made a decision to not allow for it in their particular 401k. So the executive order is kind of like, okay, well, it's always been allowed to invest in private equity. It's just that the employer has decided not to allow for it in their 401k. And ultimately, it's the employer, along with the trustee, that decides whether or not you can invest in certain types of investments, whether it's equities, real estate, private equity, crypto, and so forth. Now, from a solo 401k perspective, not all solo 401k plans allow for investing in private equity. For example, a solo 401k offered by a traditional financial institution such as Fidelity, Schwab, Chase, Wells Fargo, so banks and brokerage firms, those typically do not allow for investing in private equity through their solo 401k. However, another type of solo 401k called a self-directed solo 401k, which is really a solo 401k, it's just a way of saying that, hey, it's self-directed, meaning that you can place investments into alternative investments like private equity, real estate, and so forth. Those type of solo 401ks, that is self-directed solo 401k plans, can invest in private equity. A company like my solo 401k Financial, for example, does offer a self-directed solo 401k that can invest in private equity. As a matter of fact, clients of my solo 401k Financial have been invested in private equity all the way since 2009 when the company first started. And I know that self-directed IRAs can also be invested in private equity. I know many trust companies that offer self-directed IRAs have allowed for investing in private equity since the mid 1990s. So it's nothing new with regards to being able to invest in self-directed IRAs or even solo 401k plans. And again, the IRS regulations do allow for it. It just comes down to whether or not your employer has made the decision to allow for it or not. But in the context of a self-directed solo 401k, you are the business owner and you're the trustee of the plan, so you can elect to invest in private equity as long as the self-directed solo 401k provider that you utilize for your solo 401k provides you with the plan document that allows for investing in alternative investments like private equity. And again, such a provider is my solo 401k Financial. Now, to be eligible to open a self-directed solo 401k, you need to be self-employed. That's why it's oftentimes referred to as an owner-only solo 401k or owner-only employer 401k because it's for business owners. There's also the spouse exception where the business owners' spouses can also participate in the plan provided they also work in the business. Now, if your business employs any full-time W-2 employees who are not owners in your business and they work 1,000 hours or more in your business, then you would not be eligible to open a solo 401k plan because again, a solo 401k is for owner-only businesses. Now, don't confuse that owner-only business with an S corporation. So if you're self-employed business is an S corporation, obviously you're the owner and you're a W-2 employee. So you can participate in the plan regardless if you work 1,000 hours or less. The, the clarifying point is that from an eligibility perspective, you cannot hire any non-owner full-time W-2 employees who work 1,000 hours or more in your business. If you do, you would not be able to open a solo 401k plan. All right, looks like we have a question here. Let's take a look at that question and then we'll come back and pick up where we left off. So, looks like Isaac has a question here from Hawaii. This time of year, it's probably great weather out there. Well, it's probably always good weather in Hawaii, kind of like here in San Diego where we're at. Okay, so you've got a question here. I'm going to be investing in real estate, fractional fund. I like to invest in it partially from my solo 401k Roth, 10%, and 90% from my pre-tax account. How would I go about doing this? Good question. So it's considered just one solo 401k plan. So the solo 401k plan allows for Roth solo 401k funds, as well as pre-tax solo 401k funds, and even voluntary after-tax solo 401k funds. So at the end of the day, it's considered just one plan. However, that particular plan needs to have separate holding accounts for each source of funds, that being pre-tax, Roth, and voluntary after-tax. So when you go to make the investment in that real estate syndicate, title to that investment is going to be in the name of the solo 401k plan. Let's say the name of your solo 401k plan is XYZ Retirement Trust. Let's further assume that you've opened up two separate brokerage accounts over at Fidelity for that self-directed solo 401k offered by my solo 401k Financial, because Fidelity does provide brokerage accounts for self-directed solo 401k plans offered by my solo 401k Financial. And it's my solo 401k Financial's plan that allows for investing in private real estate syndicates. So Fidelity does offer their own solo 401k, but they do provide brokerage accounts for a self-directed solo 401k offered by my solo 401k Financial as well. So let's say you have two brokerage accounts over at Fidelity for the XYZ Retirement Trust. One's to hold the Roth solo 401k funds, and the second one is holding the pre-tax solo 401k funds. So title to that investment is going to be taken as follows: Isaac Yoshimori, comma, trustee of the XYZ Retirement Trust. So that's how title is taken. In other words, you're not listing the title twice because it's only one solo 401k that's investing in that private syndicate. So you're investing both pre-tax and Roth solo 401k funds. You will then wire money out. Fidelity will allow you to wire money out of that brokerage account to that private equity or private real estate syndicate investment sponsor. So you'll wire 10% from the Roth solo 401k holding account, so the brokerage account, the other 90% from the pre-tax solo 401k brokerage account. Now, when the private syndicate wants to send funds back to the solo 401k, whether they're dividends or you sell the position, those funds will flow back to each of those respective brokerage accounts for the solo 401k at a 90 and 10% interest, because it's based on how much funds you invest from the pre-tax solo 401k bucket and the Roth solo 401k bucket. So you need to make sure you split those dividends based on that 90-10 split, as well as when that private investment is sold, they would flow back accordingly. So one plan, invest in both pre-tax and Roth funds, dividends and sale will flow back according to those ownership percentages. All right, great question. Go ahead and continue typing over your questions during the live topic today, which is, can a 401k invest in private equity? We've been talking about that. And then we'll pause and answer questions you have. It doesn't have to be in particular to based on today's topic. It can be regarding any topic. Okay. Oh, I'm glad to hear that they're over at Fidelity through my solo 401k. So I'm glad that we were able to answer your question. Let me send over a link as well from our website regarding investing in private real estate syndicates, also known as private placements or private equity for that matter. A lot of private equity investments are real estate syndicates. Give me a moment here, and I'll share that sample procedure on our website that talks about how to invest in private equity through a self-directed solo 401k plan. In the meantime, we'll continue covering today's topic. So we've already covered these first two bullet points here. Let's talk about IRS rules and prohibited transactions. Since a solo 401k plan is a retirement trust, then it's going to be subject to IRS regulations. From a regulatory perspective, you can invest in private equity through your 401k, provided that the plan that you opened allows for it. We already talked about how a self-directed solo 401k from my solo 401k financial does allow for investing in private equity, and how our clients have been making those types of investments since we started back in 2009. From a regulatory perspective, you have to be aware of prohibited transactions. You also need to be aware as to what documents provide when you invest in private equity through a self-directed solo 401k. We just talked about how title to that investment is taken in the name of the solo 401k plan. We gave an example of how title's taken. Also keep in mind that as far as investment documents, you typically need to complete the private equity uh, private equity paperwork, such as the private offering memorandum, subscription agreement. Those type of documents are provided by the private equity investment sponsor, and those need to list the solo 401k as the investor. Also, you need to make sure that they utilize the employer identification number for the solo 401k for reporting purposes on the K1 by that private equity, because they will issue a K1 at the end of the year, which they need to make sure they issue in the name of the solo 401k using the solo 401k's employer identification number. So yes, the solo 401k is a retirement trust, therefore it requires its own separate EIN number. You cannot use your social security number or your business EIN. So that's important to understand. All right, as far as other forms that apply, we do have a form on our website. It's called an investment form. If you go to the Forms tab of our website on the top right-hand corner and click on Forms, you'll see a form titled General Investment. That's a form that you would use to help document that solo 401k investment in private equity. But again, the private equity firm is the one that would provide the subscription agreement and the investment offer memorandum. They would prepare that. So, and that's standard protocol. So any private investment firm you deal with or private equity firm, they're going to know exactly what forms you need in order to invest that self-directed solo 401k. So the subscription agreement, that's very common. So as far as other, let's talk about prohibited transaction regulations. So you are not allowed to invest your solo 401k in your own private equity fund. That's a prohibited transaction. Nor can you invest your solo 401k in in a private equity company or fund offered by your spouse, your children, parents, for example. Um, that's prohibited. That's because you are referred to as a disqualified party. You, your business, your self-employed business, your children, parents, as I mentioned already, and your spouse. So that's prohibited. What is more, you typically cannot invest in aggregate. Let's say you want to invest your personal funds as well as your solo 401k funds in that private equity. You cannot, you personally, with along with your solo 401k, cannot own, typically cannot own 50% or more interest in that entity, so that private equity. I'm sure that's not going to be an issue if you're investing in Perplexity, which is a private stock, SpaceX, obviously ChatGPT, your solo 401k, and you combine are not going to own 50% or more of those entities. I mean, that would be nice if you could own more than that. But so that's typically not an issue. What is more, let's say you own stock, private stock already in Perplexity or ChatGPT or SpaceX, which are private firms that offer private stock. You cannot sell that private stock that you own personally to your solo 401k. That's referred to as a sell and exchange between a party, the party being you, and the plan being the solo 401k. That's prohibited. Nor can you purchase it. Let's say your solo 401k invests in ChatGPT or Perplexity or any other type of private equity or private company. You cannot sell the solo 401k's position in that entity to yourself. That's also prohibited. So those are known as prohibited transactions. So just be aware of those regulations. All right. Looks like we don't have any other questions at the moment. Go ahead and shoot over any questions you have during the live chat. We'll pause and answer those as they come in. Please also subscribe to our YouTube channel to receive more notifications as to when we go live. We'll be live again today at 1 p.m. Pacific time, so in a few hours. All right. Let's see what other topic here. So we're going to talk about some real world solo 401k strategies. Well, let's use investing in a private company like right now, Perplexity and ChatGPT. Those artificial intelligence stocks are really hot right now, and they're not publicly traded. They're privately traded companies, meaning they're not traded on an exchange. So you could invest your solo 401k in those entities if you wanted to. Now, if the solo 401k buys shares in those private entities, and those entities go public later on, and they IPO, in other words, then your solo 401k could benefit tremendously, because now that private equity holding will have converted to a publicly traded company. So now your solo 401k will own common stock, publicly traded common stock, in Perplexity and ChatGPT, for example, or even SpaceX, if you invested in that private entity. So there's a lot of room for growth inside your retirement plan, and those funds will grow tax deferred if that investment is made through the pre-tax solo 401k, or if it's made through the Roth solo 401k, all those gains will grow tax free. And then when you go to sell those stocks, the proceeds will go back into the solo 401k and grow tax free or tax sheltered in the case of a pre-tax solo 401k. So that's the upside. Now, of course, anytime you invest a solo 401k, whether it's in private equity or publicly traded stocks, there's always a risk that private company is going to go under, or that publicly traded company is going to go under. So you want to make sure you consult with your financial advisor as to whether or not it's a good idea to invest your retirement funds in private equity, publicly traded companies, or any type of investment for that matter. Here at my solo 401k Financial, we don't provide tax or investment advice. So today's daily webinar, as all other webinars, are for educational purposes. So you got to weigh those risks and rewards when investing in any type of investment, whether it's private equity, publicly traded companies, real estate, cryptocurrency, precious metals. So you can always end up losing your retirement funds, or they could go down significantly in value if that investment doesn't perform accordingly. All right, let's see if we have any other questions here. We got a comment here. I would love to invest in SpaceX, Perplexity, and ChatGPT. Well, you certainly can through the Solo 401k. The Solo 401k offered by my Solo 401k Financial does allow for it. You just need to open up a brokerage account with an exchange out there that does allow for investing in private equity. There are many out there that do allow for investing in private equity through the Solo 401k. You would open up the brokerage account in the name of the Solo 401k so that you can invest in private equity. Okay, so it looks like we're almost at the end of our session here. If you have any questions, please go ahead and type them over. Again, we'll be live again here in a few hours at 1 p.m. Pacific time. Today's topic has been, can a 401k invest in private equity? We talked about how, yes, the regulations do allow for it. However, it just comes down to the plan document as to whether or not you're allowed to invest in private equity. Also, from a traditional 401k, aka full-time employer 401k, those type of plans may allow for investment in private equity. It just comes down as to whether or not that business has made the decision to allow for it. We do know that the president signed an executive order calling for allowing for investing in private equity through traditional 401ks. We already talked about how the regulations already allow for it. It just comes down to the business offering the plan as to whether or not they allow for it. We talked about how solo 401k plans offered by traditional providers like the Schwabs, the Fidelities, E-Trades of the world, or banks do not allow for investing in private equity. However, a self-directed solo 401k from my solo 401k Financial does. All right, thank you for joining today's daily webinar. We appreciate you asking your questions. We'll be live again here in a few hours. Until next time, have a great rest of the day.